Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 162, recorded here on April 13th, 2025. This podcast is for entertainment only, not investing advice. Do your own homework. We are at block height 892258, Moscow time 1186. Fees very low at 1, 1, and 1. We'll get started with the market news update outlook. It was another wild week. And then we'll get into the weekly top Bitcoin news. Check out this week's featured post on the Bitcoin Fortress Substack. Take a quick look ahead, and then we will wrap it up. So let's get started. Wall Street's benchmark S&P 500 index on Friday posted its best weekly advance since early November 2023 after a roller coaster few days. Tariff developments continued to dominate headlines. The US and China raised tariff rates against each other, further escalating a trade war between the world's two largest economies. However, market participants also received a major reprieve after US President Donald Trump on Wednesday announced a 90-day pause on most reciprocal tariffs except for those against China. Trump's move led to one of the most explosive single-session rallies in Wall Street history. The S&P 500 soared more than 9% to log its best intraday performance since the financial crisis in October 2008. Well, that ought to be a warning sign. Not to be outdone, the Nasdaq Composite skyrocketed more than 12% to notch its second best day ever. Traders also received some key inflation data this week. Both the headline consumer price and producer price indexes for March unexpectedly slipped. Friday saw the start of the first quarter earnings season with reports from major banks, including the number one and number three U.S. banks by assets, JP Morgan and Wells Fargo. And no surprise there, the banksters are making lots of money in this environment. For the week, the S&P 500 jumped 5.7%, while the tech-heavy Nasdaq Composite advanced 7.3%. The blue chip Dow gained 5%. Looking ahead, despite the initial optimism after President Donald Trump announced the 90-day suspension of tariffs this week, affecting more than 75 countries, not everyone is convinced that the economic turbulence is over. Investors will keep a close eye on economic events scheduled for the coming week, with Federal Reserve officials Bostic and Barkin set to speak on Monday. Tuesday will see the release of the export and import price index, while Wednesday will include economic reports such as retail sales, industrial production, and business inventories. Meanwhile, Thursday will include jobless claims and building permits. The major names scheduled to report quarterly results next week include Goldman Sachs, Johnson and Johnson, Bank of America, Citigroup, United Airlines, Abbott Labs, and Taiwan Semiconductor. So should be another wild week on Wall Street for those who care. All right, next up, and by the way, I'll include links to all of these articles I'm going over here in the show notes. So if you want to dive in a little deeper, the first up here is from CoinDesk. This is the CoinDesk Weekly Recap. Crypto emerges from the tariff war. Trump's on again, off again. Import levies dominated the week. At the beginning, tariffs sent stocks and crypto appreciably lower. By the end, with all new non-China tariffs paused for 90 days, markets were up again. Bitcoin returned to a level, $82,000, that it was at this time last week, and analysts debated whether in the panic of the previous days it showed safe haven qualities like gold, or whether it was a risk asset like many others. The consensus was that Bitcoin performed resiliently rather than completely reassuringly. Our Asia reporting team led the way on our markets coverage. Omkar Godbol started the week strong by revealing how the unwinding of the basis trade could impact Bitcoin price. Sam Reynolds wrote on how Kalshi was set to win its legal battle in Nevada, hours before the prediction market got its first victory in the state. Saurya Malawa reported on the first XRP ETF listing in the US and how Teucrium's leveraged fund received $5 million during its first day of trading. From our European team, there was some timely analysis from James Van Straten and the all-important U.S. 10-year yield moving in the wrong direction for Trump, and a story showing the resilience of the decentralized economy from Oliver Knight, how DeFi defied market carnage as traders poured millions amid panic. Our coverage expanded beyond just tariffs and market reactions with Jamie Crowley's scoop rootstock repairs to release SDKs for Bitcoin Layer 2s using BitVMX after he took the opportunity offered by an embargoed press release to phone the company and interview the founder. And there was a nice DeFi follow-up on the repercussions of Hyperliquid's price manipulation exploit from March by Oliver, how the hype for Hyperliquid's vault evaporated on concerns over centralization. Meanwhile, there was plenty of important regulatory news that wasn't tariff related. Paul Akins was confirmed as the new SEC chair. The Department of Justice closed down its crypto enforcement unit, prompting criticism from Democrats and others that it's not serious about combating malfeasance. The SEC approved ETH ETF options following a long delay, and President Trump put an end to a controversial DeFi accounting rule. It was a week that showed how crypto was increasingly central to finance and even macroeconomics. Fun times ahead. All right, moving on. Hodler's Digest from Cointelegraph for the week April 6th through 12th. Let's see what's on here. Former NBA star Shaquille O'Neal has been granted final court approval to settle a class action lawsuit for $11 million with Astral's non-fungible token buyers. Federal Florida federal court judge Federico Moreno granted approval of the settlement between O'Neal and the class group led by Daniel Harper in an April 1st order made available on April 8th. The deal created a fund of up to $11 million for eligible class members and awarded $2.9 million in attorney's fees and costs. All those who purchased Astral NFTs from May 2022 to January 15th, and those who purchased the project's native GLXY tokens up until mid-January are eligible. The fee sought by lead class counsel has been reviewed and approved as fair and reasonable by plaintiffs, Moreno's order read. Shitcoins and celebrities do not mix. A New York lawmaker has introduced legislation that would allow state agencies to accept cryptocurrency payments, signaling growing political momentum for digital asset integration in public services. Assembly Bill A7788, introduced by Assemblyman Clyde Vannell, seeks to amend state financial law to allow New York state agencies to accept cryptocurrencies as a form of payment. It would permit state agencies to accept payments in Bitcoin, Ether, Litecoin, and Bitcoin Cash, according to the bill's text. Well, good luck getting that passed over there. That's all I can say. The Synthetics protocol's native stablecoin, Synthetics USD, fell to its lowest value in 5 years, extending a months-long struggle to maintain its $1 peg. The asset has faced persistent instability since the start of 2025. On January 1st, SUSD dropped to 96 cents and only rebounded to 99 cents in early February. Prices continued to fluctuate through February before stabilizing in March. On April 10th, SUSD fell to a 5-year low of 83 cents, according to data from CoinGecko. SUSD is a crypto collateralized stablecoin. Users lock up SNX tokens to mint SUSD, making its stability highly dependent on the market value of SNX. Sounds like a shitcoin. And stablecoins are also shitcoins too. There. SEC Ripple filed joint motion to pause appeals in XRP case. We don't really follow Ripple here because it's a shitcoin. Crypto stocks have surged as part of a broader recovery in the U.S. stock market on April 9th, following President Donald Trump's 90-day pause on sweeping global tariffs. The Wednesday, April 9th trading day closed with Michael Saylor's strategy up 24.76% to $296.86 a share, while Crypto exchange Coinbase closed up 17% to 177.09, according to Google Finance data. Crypto mining companies also saw gains, with Mara Holdings up 17%, Cipher Mining up 16.59%, and Riot Platforms rising 12.77%. Top prediction of the week. Bitcoin staged a sharp rebound after US President Donald Trump announced a pause on tariffs for non retaliating countries, reigniting bullish momentum and raising hopes for a potential surge toward the $100,000 mark. On April 9th, Bitcoin USD surged by approximately 9%, reversing most of the losses that incurred earlier in the week to retest 83,000. In doing so, the pair came closer to validating a falling wedge pattern that has been forming in its daily chart since December 2024. As of April 9th, Bitcoin's price was confined within a falling wedge range while eyeing a breakout above the upper trend line at around 83,000. If it is confirmed, Bitcoin's main upside target by June could be around $100,000. In top FUD of the week, U.S. authorities have charged a tech app founder with fraud, alleging that his advertised artificial intelligence-powered e-commerce app actually relied on human workers in the Philippines. Albert Sanager of Barcelona, Spain, founder and former CEO of the company Nate, was charged with one count of securities and wire fraud, the Justice Department said in an April 9th statement, while the Securities and Exchange Commission filed a parallel civil action. Court documents said Sanager founded Nate around 2018 and launched an app of the same name in July 2020, marketing it as an AI-powered universal shopping cart that offered users the ability to complete online retail transactions, including filling in shipping details and sizing without human input. Wow, that's a quite a scam. Crypto critical U.S. Senator Elizabeth Warren has led 6 Senate Democrats in urging the Department of Justice to reverse its decision to terminate its crypto investigations and prosecutions division. In an April 10th letter to the Deputy Attorney General Todd Blanche, the senator said the decision to disband the department's National Cryptocurrency Enforcement Team was a, quote, grave mistake and would support, quote, sanctions evasion, drug trafficking, scams, and child sexual exploitation. Senators Richard Durbin, Mazie Hirono, Sheldon Whitehouse, Christopher Coons, and Richard Blumenthal signed the letter, in addition to Warren. Digital payments company Block has reached a $40 million settlement with New York regulators over alleged compliance misconducts tied to its Cash App platform, Bloomberg reported on April 10th. Block was fined by the New York Department of Financial Services following an investigation into Cash App's anti-money laundering and cryptocurrency compliance operations, Bloomberg said after reviewing the government agency's consent order. NYDFS determined that Block allegedly violated consumer protection laws and didn't conduct proper due diligence on its customers. The company was allegedly too slow in reporting suspicious transactions to regulators and failed to adequately screen so-called high-risk Bitcoin transactions. And that wraps up the Hodler's Digest. Moving along here, Bitcoin Magazine posted this on April 12th, why the bond market matters more than ever for U.S. foreign policy. Uh, this is actually a video, but I'll just read the highlights from it. If you want to watch the video, the link will be in the show notes. Experts from the Bitcoin Policy Institute unpack why the 10-year Treasury yield is central to Donald Trump's policy ambitions and U.S. Treasury Secretary Scott Bessent's economic strategy. Featuring Bitcoin Policy Institute Executive Director Matthew Pines, Head of Policy Zach Shapiro, and Growth Associate Zach Cohen. They explore how bond market dynamics affect U.S. interest payments, trade policy, and the feasibility of industrial onshoring. As America confronts growing debt burdens and fiscal constraints, understanding the yield curve becomes critical for navigating the future of U.S. monetary policy and Bitcoin's role within it. Next up from Cointelegraph, this was posted yesterday. Bitcoiners were first to realize US economic data was wrong, according to Pompliano. Bitcoin holders were the first to point out flaws in the United States economic data and position themselves for the potential upside, says crypto entrepreneur Anthony Pompliano. Bitcoiners were the first large scale group to recognize the economic data was wrong, and they figured out a way to financially capture upside if they were right, Pompliano said in an April 12th X post. The unspoken secret as to why so many finance folks are wrong in their analysis of the tariffs is because the finance folks believe the government data, he added. Amid the widespread uncertainty and ongoing fear over US President Donald Trump's imposed tariffs, Pompliano questioned the accuracy of US inflation figures, job numbers, and GDP statistics. He added that eventually everyone else will realize the data is inaccurate. It comes after Pompliano pointed out in a March 20th LinkedIn post U.S. Treasury Secretary Scott Bessent's appearance on the All In podcast, where Bessent was asked directly if he trusted the data and replied no. Even the Treasury Secretary has now publicly acknowledged he doesn't believe the data. He says we must listen to the people rather than blindly follow the government data reports. Concerns about the reliability of U.S. economic data have been brewing for a while. The July 2022 report argued that new approaches are needed to ensure government statistics remain dependable. And then they have an X post that Pompliano put up of Trueflation's U.S. inflation index, uh, which shows quite a different number than what's being reported. It comes as ongoing concerns over Trump's imposed tariffs have led some crypto analysts to reinforce the idea that Bitcoin could outlast the US dollar in the long run. Bitwise and best head of Alpha Strategies, Jeff Parks, said on April 9th that there is a higher chance Bitcoin survives over the dollar in our lifetime after today. Over the past 5 days, the US dollar index has dropped 3.19%, currently sitting at 99.783 at the time of publication, according to TradingView data. Several Wall Street analysts were under the belief that Trump's imposed tariffs would bolster the US dollar, according to a recent Wall Street Journal report. Pompliano said the mainstream finance conversation has become an intellectual boondoggle where most people regurgitate ill informed takes based on bad data. Meanwhile, analysts recently pointed out that while the stock market was tanking on April 4th amid tariff uncertainty, Bitcoin didn't decline as much as expected. During periods of macroeconomic uncertainty, Bitcoin and crypto assets have historically been more volatile than the stock market. On April 4th, Cointelegraph reported that Bitcoin was steady above the $82,000 level, and as U.S. equity markets collapsed, Bitcoin rallied to 84,720, reflecting price action which is uncharacteristic of the norm. Meanwhile, former BitMEX CEO Arthur Hayes said Bitcoin may be entering what he calls up only mode as a deepening crisis in the US bond market potentially drives investors away from traditional haven assets and toward alternative stores of value. All right, moving on. This from bitcoinnews.com, and this was posted on April 8th. Bitcoin hash rate hits one zettahash for the first time ever as price tanks. Bitcoin's hash rate has reached a historic 1 zettahashes per second milestone at a time when its price is taking a hit, demonstrating a remarkable show of strength. The Bitcoin network's total computing power has surpassed 1 zettahashes per second for the first time in its 16-year history. That is 1,000 exahashes per second, a 1,000-fold increase since 2016 when Bitcoin first hit 1 exahash per second. This kind of growth is a testament to just how far the network's infrastructure has come despite the current market turmoil. That kind of growth shows just how much the infrastructure behind Bitcoin has evolved. Even as the price takes a hit in the current market, the network's computing power is still pushing forward. Hash rate is a measure of how much computational power is being used to mine and secure the network. A higher hash rate means the network is more secure, more decentralized, and a lot harder to attack. A higher hash rate also makes Bitcoin more resistant to 51% attacks. It signals that miners are committed to the long term growth of the asset. Data from mempool.space shows that the hash rate peaked at 1.025 ZHS on April 5th. CoinWars recorded an even higher peak of 1.1 ZHS at block height 890915. These variations are due to the different methods platforms use to measure hash rate. That's a pretty small difference when you consider the impact of using a shorter or longer time frame to calculate hash rate, according to Bitcoin expert Jameson Lopp. Sometimes that can lead to reported values differing by as much as 40 exahash per second. The price drop while hash rate soars is a pretty interesting irony. After trading near $109,000 in mid January, Bitcoin has dropped nearly 30%. Some exchanges saw the price dropping below 76,000 and in some reports as low as 74,460. That comes amid broader market turmoil, with US markets losing $6.6 trillion over 2 days. Some of that is due to recession fears sparked by President Trump's tariff announcements. Despite the downturn, mining activity has continued to grow. Analysts say that's because large scale miners are betting on Bitcoin's long term value. Blockware Solutions head analyst Mitchell Askew said, miners are doubling down, expanding sites, and plugging in more efficient machines. However, these low prices could force less efficient miners out. The Bitcoin hash rate surge is being driven by the latest generation of mining equipment. That means miners are using more efficient and powerful machines like Bitmain's S21 and MicroBT's M60 series, as older models just aren't competitive anymore. Miners are also increasingly turning to cleaner, cheaper energy sources. Hydro and solar power are becoming the norm in regions like Texas, Iceland, and Norway, where sustainable mining operations are thriving. A little bit of mainstream media coverage here. A rare case of some signal. This is from CNBC, and this article was published on April 12th. Apple, Google, Cash App alums ditch big tech to build on Bitcoin, fueled by VC money and a friendly White House. And this is from Austin. On a Friday morning last spring, Mark Suman called out sick from his job as a senior engineering project manager at Apple and made his way downtown to a place called the Bitcoin Commons, a sort of clubhouse for enthusiasts of the world's largest cryptocurrency, situated a few blocks south of the Texas state capitol. At the time, Suman was, in his words, an active hobbyist, tinkering with the technology in his spare time. I actually played around with it a bit within Apple as well, he says. There's not a lot I can say other than we were always exploring new technologies. And so I was playing around with some of the open source Bitcoin tools within Apple and doing some exploratory work. Suman was there for the annual Bitcoin Takeover event. He had followed many of the speakers online, and when he saw the gathering pop up on his feed, he took the day off to see it for himself. I was sitting in the crowd wanting to get into the space and really build something new and build something novel, Suman recalled. What happened instead was the beginning of a professional pivot. He struck up a conversation with the developer after a talk at the Commons and was introduced to other coders who were winding down a project called Mutiny. Within a few months, Suman handed in his notice at Apple, and with the developers he'd met, pivoted into something bigger, co-founding OpenSecret, a startup reimagining how user data is stored in the cloud. Instead of relying on centralized databases, the company encrypts data to each individual user, even after it's uploaded. So if there's a breach, there's nothing to steal. Suman explained, no honeypot. The leap was not without stakes. There are plenty of sleepless nights, he said. I've got a family, I've got kids, I've got a kid off at university. He had spent years working on privacy infrastructure, tackling tough technical problems around user protection at scale, but saw a way to do it better with blockchain. Apple likes to talk a big game about privacy, he says, and having been there, I've seen very deep within a lot of their systems that they do care about privacy at every level. That vision and the Commons helped give him conviction. The builders there were all laser focused on creating something that mattered. Bitcoin Commons sits on the second floor of the Littlefield building at the corner of Congress Avenue and 6th Street, where the broad boulevard to the Capitol collides with the noisy sprawl of Austin's nightlife district. It's an apt metaphor for the space itself. By day, it serves as a clean, open plan co-working hub for Bitcoin operators and builders. At night, it transforms into a gathering place for rogue developers and off-the-record meetups. Events here draw a blend of venture capitalists, open source contributors, off-grid energy technicians, and lightning engineers, developers who build software to make Bitcoin faster and cheaper to use. On some afternoons, once happy hour hits, the kitchen in the back converts into a bar. Bitcoin is the most important technological innovation in any of our lifetimes, and it needs its due, said Parker Lewis, one of the stewards of the Commons and author of a new book on Bitcoin called Gradually Then Suddenly. And so, while Bitcoin has no CEO and no marketing team, we here at the Bitcoin Commons and Bitcoiners all over the world help educate people about Bitcoin, why it's important, what's being built, and present a vision for the future, continued Lewis. The vibe, it's always high signal, said Dan Lawrence, CEO of OBM, which manages energy use for industrial scale mining farms. Lawrence said he was thankful that the US government had become a little more pro Bitcoin under the new administration, but added, no matter what happens anywhere, everybody here is always going to bleed Bitcoin. This year, the Commons feels different, not because Bitcoiners have changed, but because the world around them has. The mood is bullish, strategic, triumphant even. Bitcoin's price mirrored this optimism, surging to an all-time high of nearly $110,000 in January, coinciding with Trump's inauguration. By early April, it had retraced to the low 70s before rebounding to nearly 85,000 as of Saturday morning. Volatility that underscores the market sensitivity to political developments and investor sentiment. Just a year ago, the vibe in the Commons was cautious. Even Bitcoin, the asset largely spared by securities law, felt the chill of an aggressive regulatory regime. Developers were being arrested around the world, wallet providers were being pressured, open source projects landed on sanctions lists. The question then was, who would be next? Then came the election. Trump's return to the White House brought with it a full court press of pro Bitcoin policy moves. Within his first 100 days, he'd pardoned Silk Road founder Ross Ulbricht and three co founders of the BitMEX crypto exchange, established a strategic Bitcoin reserve, and appointed a crypto czar to oversee the federal government's digital asset efforts. Even skeptics found themselves nodding. I was in Nashville when Trump spoke, Suman said of the Bitcoin 2025 conference in Tennessee, where Trump made his first major address to the crypto industry. I wasn't planning on going, but when someone like that is in town, you go to see it. Suman says he feels Trump has delivered on his promises to the crypto community for the most part. Still, he remains cautious. I am not one who embraces politicians, Suman said. I'm kind of apolitical as far as which side, so I only trust them until I see how it's actually playing out in our life. So far, I think it's going well, but it could really change. Kevin Hurley, CTO at Lightspark, said Washington's stance toward crypto appears to be shifting, with regulators like the SEC taking a less combative approach, moving away from lawsuits and toward clearer capital markets rules. Hopefully now we're actually going to have some clarity on what is and what isn't a security, what can actually be done, he said. But even in a friendlier political climate, caution over government involvement remains a feature, not a bug, of the crypto community. Joe Kelly, CEO of Unchained, a startup that helps clients store Bitcoin securely by holding their own private keys, said it's smart to be careful what you wish for when it comes to the US government owning a lot of Bitcoin. That can go other ways, he said. To date, the government's so-called strategic Bitcoin reserve has underwhelmed some digital asset advocates since it's limited to Bitcoin previously seized in enforcement actions, not newly purchased assets or sovereign investment. Still, the administration has directed the Treasury and Commerce departments to explore budget-neutral ways to acquire more Bitcoin. Kelly acknowledges a shift in the regulatory atmosphere, but he's also wary of premature celebration, even with big market wins like the launch of exchange-traded funds that allow investors widespread access to Bitcoin. If something like the ETF had launched too soon, I think it could have distracted from the people building on the actual technology itself, Kelly said. We've had the fortune that for most of Unchained's life, there wasn't an ETF. He added of the firm's efforts to educate investors on how to store their crypto. The shift has had ripple effects across the industry, including insurance. Becca Rubenfeld, COO of AnchorWatch, says regulatory movement is opening the door for Bitcoin to be treated like any other financial asset. Traditional insurers don't cover Bitcoin directly, they insure the infrastructure around it. But if Bitcoin becomes an admitted asset on insurance company balance sheets, that changes everything. Currently, the industry is extremely underserved, Rubenfeld told CNBC, but what AnchorWatch is doing is specifically insuring the asset itself, so we build a proprietary custody solution. And when customers use us for custody services, Lloyd's of London backed insurance is included in those services. The demand is growing, so is the pressure to build and secure the technical infrastructure that makes Bitcoin work. Mike Schmidt, executive director of Brink, which funds open source Bitcoin developers through a nonprofit structure, emphasized the importance of supporting the engineers maintaining Bitcoin's underlying infrastructure. Bitcoin needs engineers, he said. We have a $2 trillion asset. We have strategic reserves of Bitcoin being held by countries. And there's just this small group of engineers that are keeping this thing together at the code base, Smith said. There's only maybe 40 full-time engineers working on this, so we want to make sure that the engineering growth can keep pace with the broader adoption. Lisa Nygut started as a back-end engineer at Cash App, where she worked on their internal Bitcoin product before moving to Blockstream and spending 6 years as an open source developer on the Lightning Network. These days, she runs Bitcoin Plus Plus, one of the largest technical conference series in the space, with 6 events planned across 6 countries this year. Bitcoin Plus Plus is focused on bringing together Bitcoin developers and builders to talk about what they're working on. The frontier of Bitcoin, Nygut said. You can get an idea of what Bitcoin is going to look like tomorrow. That sense of momentum resonates with filmmaker Alana Mediavia, who spent 5 years at Google working on films about big data and cloud infrastructure. She screened her new documentary, Dirty Coin, a feature length project looking at Bitcoin's energy footprint and the people behind the infrastructure at the Commons. I had put my time in the cloud space, she says. I understood what data centers were, I understood where it was going, and I also understood how much energy it takes to run these huge facilities that right now are running the backbone of our society. Her goal wasn't to necessarily defend Bitcoin mining, but to broaden the conversation. I just want to get everybody's data center literacy up to a certain point where we can continue to have conversations about it because it's not going away. She described the crowd in Austin as a coming together of people very committed to their craft, in her view, driven more by shared ideals than by profit seeking. People think it's like a get rich quick, she said. Maybe those were the old days for Bitcoin. Now, if you want 100x, you should look at altcoins and meme coins and other stuff, but you're probably not going to get that with Bitcoin. What brings them together is that they want to have better money and they want to have a more fair world, she added. So the principles are solid. How we implement those principles, that's where the variety and spice of life comes in. A surge of new funding is also reshaping Bitcoin's builder economy. Venture investment in Bitcoin related startups soared in 2024 alongside the crypto market's rally. The number of pre-seed deals in the space climbed 50% last year, according to research from Trammell Venture Partners, an Austin-based VC firm focused on Bitcoin native startups. Across all early stage funding rounds, nearly $1.2 billion has been invested in Bitcoin companies since 2021. The renewed interest comes after years of technical upgrades to the Bitcoin protocol and growing confidence in its long-term resilience. Serious people no longer question whether Bitcoin will remain 15 or 20 years into the future, said Christopher Callicott, managing director at Trammell. So the next question becomes, is it possible to build what the founder is trying to achieve on Bitcoin? Increasingly, the answer is yes. PitchBook projects that PitchBook projects that crypto venture funding will surpass $18 billion in 2025, nearly doubling the annual average from the previous 2 year cycle. Much of that capital is flowing into Bitcoin infrastructure and applications, payments, privacy tools, custody solutions, rather than the speculative trading platforms of previous cycles. Turning ideals and venture dollars into reality still requires real world infrastructure, and that's where entrepreneurs like Stephen Barber, the founder of Canadian firm Upstream Data, comes in. He's spent years building off grid mining containers for remote oil fields, But this spring, he's expanding operations into Wyoming, a bet he attributes directly to the Trump administration's rollback of energy regulations and renewed push for domestic production. Wyoming, home to both sprawling coal operations and some of the country's most permissive crypto laws, has emerged as a hub for Bitcoin miners and the lawmakers who support them. The administration's latest executive orders loosen environmental restrictions and encourage more fossil fuel development, a boon for oil field miners like Barber, even as critics warn it could come at a steep climate cost. I'm extremely optimistic and bullish on Trump's administration, Barber said. The EPA finally came out with a new stance on all these things, and they've been doing to just destroy the energy sector in America, which has affected us very negatively. I'm seeing a lot of things going the right way now with the decisions the Trump administration is making, and clearly they're trying to attract investment in America and manufacturing. Zap writes Lewis, one of the Commons' most vocal policy thinkers, agrees that things are moving in the right direction, particularly around the government's decision to establish a formal national Bitcoin reserve. While a crypto executive order is an important first step, codifying it with law will help drive further regulatory clarity than the US is open for Bitcoin, Lewis said. It will also be good for the country. The biggest priority could be for the regulatory clarity piece, pushing Senator Lummis's Bitcoin Act to codify and make permanent. Senator Lummis, a longtime advocate for the industry, is pushing legislation to codify Bitcoin protections into federal law. Her proposed legislation outlines a plan for the U.S. to buy Bitcoin with existing funds of the Treasury Department, which includes tax revenue. The idea, in part, is to position Bitcoin as a strategic reserve asset, one that could appreciate over time and reduce reliance on debt. Senators said that the ultimate goal is to reduce the federal deficit as well as position Bitcoin alongside gold and other hard assets as a way to strengthen the dollar over time. Without the Bitcoin Act becoming law, Lewis warns that today's tailwinds could reverse with a single administration change. But while Washington debates Bitcoin's role in the future of the U.S. economy, Suman was already betting his own on it. Why did I leave this really cushy job at Apple where I was getting paid a lot and had stock and that kind of stuff to come here where my future is uncertain? He said, it's the possibility of building something new and I think is really needed in the world, and I hope it pans out. If it doesn't, and we go down in a glory of fire, at least I will have tried something that I really believe in. Even after he accepted the job offer to join Mutiny, later pivoting into Open Secret, things didn't calm down. That was right when a prominent group of developers were arrested, he recalled. They were developing an app called Samurai, and they got arrested. I had accepted my offer with Mutiny, but I had not yet left Apple. The gamble wasn't just career-based, it was emotional, existential. Knowing that people were being arrested and there was a lot of uncertainty, I still dove in, he said. The guy said, listen, if you're worried, we can just call this off and you can stay at Apple, Suman recalled. But I said, no, I really believe in what we're building. Let's make this thing scale. Wow, that was a really good piece. A lot of signal in there, surprisingly. Okay, next up from TradingView. This was posted on April 13th. Saylor signals new Bitcoin buy after strategy reports nearly $6 billion Q1 unrealized loss. Strategy may have resumed its Bitcoin purchases after a 1 week break. Michael Saylor, the company's executive chairman, posted the Bitcoin tracker on X on Sunday, a move that typically hints at an upcoming purchase announcement. Saylor's tweet comes after Strategy reported approximately $6 billion in unrealized losses on its Bitcoin holdings during Q1 2025. Company acquired 80,715 Bitcoin in the quarter at an average price of about $94,922 per coin, during which Bitcoin prices fell nearly 12% in its worst quarterly performance since 2018. Strategy temporarily halted Bitcoin purchases in the week ending April 6 due to a lack of stock offering purchases for its MicroStrategy MSTR and STRK securities. The company has invested about $35 billion in Bitcoin at an average price of $67,485 per coin, resulting in roughly $8.6 billion in unrealized gains. Its most recent purchase, announced on March 31st, added 22,048 Bitcoin worth $1.9 billion, bringing its total holdings to 528,185 Bitcoin, nearly 3% of Bitcoin's total supply. The holdings are currently valued at around $44 billion. Bitcoin has experienced volatility this week, falling below 75,000 on Monday before recovering above 80,000 amid rising US China trade tensions. Digital asset trades at about $83,700 today, showing a slight decline over the past 24 hours per TradingView. Okay, and then finally, we'll wrap up with an article from Crypto Potato. This was posted on April 11th. Bitcoin outshines stock markets in risk-adjusted terms as fiat strains show. Despite suffering a near 30% drop from its peak, Bitcoin is outperforming traditional markets like the S&P 500 when adjusted for volatility, sparking renewed debate over the cryptocurrency's role as a systemic hedge. Market analysts, led by Bloomberg's Jamie Coutts, says Bitcoin's behavior may not just be a sign of endurance, but a signal of deeper cracks in the global financial system. Coutts reignited the conversation, highlighting Bitcoin's risk-adjusted outperformance despite recent fluctuations in global markets, shooting through the roof as a result of Donald Trump's instigated tariff standoff. Even while trading at 2.5x the volatility of the S&P 500, Bitcoin's drawdown was only marginally worse, a trend the market strategist notes has persisted since 2022. His analysis builds on a 2023 thread where he dissected Bitcoin's Sortino ratio, a risk-adjusted performance metric that showed the number one cryptocurrency consistently topping traditional assets like equities, bonds, and gold across several market cycles. Coutts' thesis hinges on a broader narrative. Bitcoin's fixed supply and decentralized nature make it a hedge against the entropy of fiat driven markets. What is happening right now is epic. Things are breaking, he tweeted on April 9th, suggesting that nation states may soon recognize Bitcoin as a global settlement layer as trust in traditional finance erodes. His 2023 analysis modeled the impact of reallocating just 1% of a traditional 60/40 bond equity portfolio into Bitcoin. The backtest, running from 2015 to 2022, showed improved returns even though it still trailed monetary debasement. According to him, this meant even modest Bitcoin allocations could boost long-term portfolio durability. Critics have, however, cautioned against extrapolating Bitcoin's short history too much, pointing to its liquidity constraints. Coutts also concedes advising smaller portfolio positions rebalanced less frequently. Despite the bullish long-term view, Bitcoin's short-term behavior is still volatile following the release of U.S. Consumer Price Index data for March, showing inflation cooled more than expected. The asset initially went against expectation, retreating from 82,500 to around 78,600 per data from CoinGecko. Currently, it sits at 82,000, down about 0.3% in the last 24 hours, but still up almost 15% year on year. Additionally, its 2% dip over 7 days means it is outperforming the broader crypto market, which has shed 4.4%. Okay, we'll finish up here. Just want to highlight this week's featured post on the Bitcoin Fortress Substack. Articles entitled Hal Finney, Bitcoin's Quiet Hero. So check that out. I'll put a link to that in the show notes. And then, like I've been doing every week, I'm going to give a quick look ahead at what's coming up on the Bitcoin Fortress Substack. So the next article up is Bitcoin's price resilience amid tariff turmoil, which we just talked about a little bit. So that was an interesting piece to write. Next, we have how to make the most out of life and enjoy the journey, followed by getting a Bitcoin backed loan in California, followed by the Matrix, Bitcoiners, and the power of memes. That will be followed by finding meaning and purpose. And I'm celebrating a 1 year anniversary with Substack. So I have a post on that as well. And with that, I will thank you all for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can follow my Substack at bitcoinfortress.substack.com. And you can follow me on Nostr. My NPub is in the show notes. And with that, I will talk to y'all next week. Bye bye.